Jackson CPA here with another awesome video in regards to the PPP loan program and how to determine if you are eligible for a PPP loan if you're a partnership with no employees, okay? We're going to talk about partnerships with no employees here. There's a calculation that you would do, and here's what you would do if you did not have an initial loan for PPP back in before August 2020 when they ended the program. You're going to look at your partnership K1s for either 2019 or 2020. And you're going to look at line 14A of the K1, and you're going to add all of those up. If any individual partner had a K1 with line 14A greater than $100,000, you're going to reduce it to a $100,000 maximum per partner, okay? Whatever the total is of all those K1s, line 14A is, you're going to take that number, you're going to multiply it by 0.9235. Then you're going to divide it by 12, and you're going to multiply it by 2.5. That is the maximum amount you're going to be eligible for as a PPP loan, okay? Fairly simple calculation. Most people can do this, so you can at least see if you're eligible or not, okay? You're going to need a bank statement or an invoice that's dated around February 15th of 2020 to prove that you were in business. You will also need a copy of your 2019 or 2020 partnership tax return, including the K1s, to submit to the lender to prove how you came up with your numbers for the calculation, okay? Now, if you did get an initial loan prior to August of 2020 and you're trying to get a second loan, there's an additional qualifier that you need to do. You need to have used all the proceeds from that first loan, first and foremost. Secondly, you have to prove a 25% reduction in gross receipts, okay? Now, how you would do that is you look at each quarterly time period. It's a calendar quarter. January to March, April to June, July to September, October to December, and you compare those quarterly time periods to the same time period in 2019. You compare 2020 to 2019. If any of those quarters show a 25% reduction or less, then you qualify for a PPP loan, for a second one, okay? If they don't, then you do not qualify for a second PPP loan, all right? It's just kind of that simple, all right? Now, the definition of gross receipts is a little complicated, so it's hard to know exactly what that is, but generally speaking, if you look at your tax return and it shows, and that number would generally go into that line that says gross receipts, then that's likely going to be what you're going to use in terms of determining the 25% reduction, okay? So that's just an important tip for you there in terms of how to calculate PPP loans when you're a partnership with no employees. If you are having trouble figuring out if you qualify or not, please do reach out to us and we can assist you and help you through the process. We help people with the application process. We help them with the forgiveness process. We are your PPP consultants that will get you through this time period and make sure you get as much as you can, and that's allowed under the law, no more, no less, okay? So thanks for listening in. Any questions, let us know, and we'll talk to you later.